So, if one of the biggest drivers is the Fed stopping, obviously the increasing of rates, and it seems to be, everyone's projecting how many rate decreases we're going to have. Initially was six, and now we're down to three, and now the market seems to be comfortable with three. What does it look like if we end up seeing zero? Because you're talking about the market, really reaccelerating. So, how does the Fed, write that where we're going to lower rates, but we have a economy that's continuing to be strong, consumer strong, and frankly, with the rise in asset prices, right? I don't see people not spending anytime soon.
It's true, right? I mean, I think what you're getting at is how unusual that we would have a cut in interest rates when, if the economy was a patient, the patient's certainly not in the hospital, probably doesn't need medicine. And if anything, they're back up and at it. This economy does not require rate cuts for its longevity to continue. But the question you're asking is more about, well, what do the markets do, right? If the
Yeah.
markets have been up as well as they have in anticipation of rate cuts, and the probability of zero cuts is hardly zero, right? I would say it's probably close.
Yeah.
But that would be unusual that we would see that. In fact, we've done work on this. I know you have as well, Carl. When you go back 60 years, there's only really been one period of time. I mean, you could argue three, where the Fed has loosened monetary policy and has cut interest rates, and the economy didn't require it. The most recent would be 2019. We got three rate cuts by Jerome Powell, the current Fed chair, in the summer and the fall. There was no need for it. We got it. I mean, maybe there was a potential trade war with China, but I think the media blew that way out of proportion. That's my own thought. But we get the three cuts. And remember, the S&P was up 32% in 2019. What a great time to be an investor. A lot of it, case in part, because the Fed loosened rates. The last time prior to that, 1995, Alan Greenspan was Fed president at the time. Same, three rate cuts, 25 basis points, one in 95, two in 96. Stocks were up almost 40% over that period of time. The economy was fine, A-OK. And then the last one, you have to go back to 1967, 66, 67, and nobody really remembers that, right? Because most of us weren't really alive then, and even if you were, you probably weren't thinking too much about it. Point is, same story, right? Rates were cut, economy was fine, markets are up significantly over a 12-month period, almost 30%. So it's not unprecedented that we'd get it, but it's unusual. Here's how I see it playing out.
Yeah,
The
that'd be helpful.
Fed needs inflation to continue its downward descent, right? Or, continued going down. That's not a guarantee. And what you're starting to hear are different voices within the Federal Open Market Committee, right? Voting members, the people who actually say, hey, yes, I vote for a cut. No, I don't, right? You're starting to see maybe a less homogeneous, right, a concerted effort where some significant voices are saying, hey, there's no rush here. And others are saying, yes, we need to cut. So it will be interesting to see how this reconciles itself. What I firmly believe is that there are certain aspects of this rally in the market that could face some, let's just say, some choppiness here if
Yeah.
we don't get the amount of rate cuts that people are hoping. Small caps have advanced pretty significantly relative to large in anticipation of a broadening market. Value, the deeper cyclical areas like commodities, energy, materials, industrials, even financials, if you can believe it. Financials, one of the best sectors, even better than tech, since the November start of this rally, up over 30%. Nobody would, you'd win a bar bet on that one, Carl, because people would say, you serious about that? But those areas of the market have seen a lot of adrenaline here. And I'm just wondering if those areas outside of the large cap growth area, the tech space, the discretionary space, if those areas are catching a bid because of the anticipation of rate cuts, and if they don't come, there will be a period of reconciliation where those names might actually see a significant pullback, and maybe it's the high quality large cap growth that continues to participate here. It'd be interesting to see how that plays out.